Hello everybody. Today it will be my 29th lecture series, and I'm starting a series on capital market. All the lecture series which has already been given on my YouTube as well as in my LinkedIn profile and Facebook. Some of the lecture series I have mentioned just the part 1 to part 4 recently concluded yesterday. On the 28th lecture series I have concluded on the money market. So you all know that the financial market has two main important component. One is the money market, another one is the capital market. There are many markets also, like it has got commodity market, future market, derivative market. There are many market, but broadly speaking, if we consider the two markets, money market and capital market. So today our lecture and the session will be on the capital market. But before going to that, I have got some requests from somebody of my friends that I should also give a reflection on the financial market. That what is the financial market? Financial market is a market in which the people trade sorry, the financial securities and derivatives at a very low transaction cost, because some of the securities include the stocks and bonds, raw materials, and the precious metals which are known in the financial market as commodities. Now the term market sometimes are used for what are more strictly called exchanges, like stock exchanges, and the where the equities are listed, the bonds are listed, the derivatives are also listed on the exchanges. So that is the organization that facilitates the trade in the financial security, that is a stock exchange or the commodity exchange. So if you broadly speak, like for example in India we have got Bombay Stock Exchange, we have got a National Stock Exchange, and this may be physical location like the New York Stock Exchange in USA. We have got NASDAQ or Johannesburg Stock Exchange, or the electronic system such as the NASDAQ, which has no physical presence. And much trading of the stock take place on an exchange. Still corporate actions like mergers and acquisitions, spin-offs are outside an exchange, while any two companies or people for whatever reason may agree to sell the stock from one to another without using an exchange. Now there are also trading of currencies and bonds which are largely on the bilateral issues, although some bonds trade on stock exchange also, and the people are building electronic system for that. Now what are the types of financial markets? I'll just briefly touch on the financial market portion. The types of financial markets are obviously often used to refer to just the market that actually raises the finance. In the last lecture series I mentioned about the money market, that how the money market works, what are the mechanism, what are the instruments, who are the regulators. For India, in regulator is RBI, the banking system, the scheduled commercial banks, the banks which actually operate, the NBFCs. They are kind of regulators, and they are also players in the market. Now the thing is this: the main agenda of understanding this market is to raise the finances. Who is going to raise the finance for what purpose? For personal needs, you are taking personal loan. For car loan, you are taking a car loan. For buying a property, you are taking a home loan. For starting an SME business, you are taking a loan. For a banking financial institution. So our main for industries, they take Uddam loan, and many other big industries, like they also go for external commercial borrowings, foreign currency loans, and they also float the equity shares in the market to want to raise the finance from the market. So there are many segments of understanding the market which actually involves in raising the finances for the firm. Now the money market deals in short-term loans, and generally for a period of a year is a catchfall for all the markets in the financial sector, as per the example like capital markets. And this is the area where I'm going to touch, where the capital market, which consists of the stock markets, which provides the financing through the issuance of shares or the common stock and enable the trading thereof. So I will shift my focus to the capital market right now, our main topic today, the lecture of discussion of the 29th lecture series, that what is the concept of capital market. Now we all know how the term capital market came. Capital market came from the word capitalist. So if somebody will tell you are absolutely capitalist in nature, there is no sign of communism, there is no sign of socialism in you, it means you are not meant for society. They always address capitalists as a individualism. They always concentrate on themselves. building wealth for themselves, building wealth for their family members, building wealth for their benefit. And most important thing, the capitalist agenda, as was said everywhere, is that they are always profit driven, well driven. But so to some extent, it is a quite debatable topic. Are they really profit driven? Are they really well driven? They are not generating wealth for the society. For example, any industry, for Reliance industry is a private enterprise. Adani Group is a private enterprise. Birla is a private family business. And for example, the Kirloskar, for example, Bajaj, for example, TVS Group, this is all family business. And they have got a capitalist model also. They are earning profit for themselves, but at the end of the day, they are also creating wealth for the others. How? They are providing employment generation for for large number of people. For example, Tata. Tata has built a city called Jamshedpur. For what? For the society. All the people are living over there, earning money. There's so many things are involved. Besides the Tata, there's so many ancillary industries also. So the object of capitalism is not to generate wealth for themselves only. The objective of capitalism is also for the society, and that is why we in India we call it mixed economy, or a hybrid economy, where there is a little bit of socialism as well as capitalism. That is entirely a different topic. That is somewhere discussed down the line. But today our main understanding will be to understand the capital market. A capital market is also a very important part of a financial market, in which long-term debt over a year. But where we have studied it, where we have discussed about the money market, where it is less than a year, but capital market is mainly for more than a year. Or equity-backed securities which are bought and sold. We all know the equity-backed securities means all the shares which are listed on the stock exchanges are bought and sold. So in contrast to a money market, where short-term debt is bought and sold, capital market channel the wealth of the savers of those who can put it to the long-term productive use, such as the companies or the governments making the long-term investment. Now there is a huge regulation for capital market. Somebody always tells me that capital market is not regulated. Who said capital market is not regulated? Money market is being regulated by RBI. Capital market is regulated by SEBI. They are all regulatory agencies, and multiple bodies are regulating. Institute of Chartered Accountant of India, Institute of Company Secretaries of India, Institute of Cost Management of India. They are always developing new kind of guidelines and guidance notes for the compliance of their own members in order to audit for the listed companies. There are red eyes and the strict eyes of the NFRA, National Financial Reporting Authority. It's a public oversight body of these three professional bodies. That the audit functions, the corporate governance are strictly maintained in these companies. There are so many organs. There's SEBI, and there are numerous regulations in the SEBI. There is Security Contract Regulation Act. There are many guidelines and regulations which hovers around the SEBI. There are many business law which actually controls the capital markets in India. So financial regulators like Security and Exchange Board of India, the Bank of England, and the US Securities and the Exchange Commission oversee the capital markets to protect the investors against the fraud, among the other duties. Now, we all know that the trading floor of the New York Stock Exchange, everybody was talking on the phone, everybody is seeing this screen. This is a usual picture of a capital market. But right now, those things were in the past. Those things have gone. Now, our capital market has developed into a kind of entirely on the electronic system. What NASDAQ is. NASDAQ is the National Association of Security Authorized Dealers and Quotations. So most of the traders on the New York Stock Exchanges are executed electronically, but its hybrid structure allows some trading to be done to face on the floor. I will discuss about the capital market in a total and in depth wise, and make an analysis so that all our viewers, all our friends, including students, academicians who are studying commerce, finance, law, will be able to understand how capital market is being regulated, how capital market is being watched, how many regulators are there, how capital market actually give a platform in the form of exchanges for the companies and the entities to float the equity shares. We will all discuss about these things in our later part of our series. So thank you for watching the 29th lecture series and part 1 capital market. Thank you very much.